Hello and good morning, everyone. My name is Jillian Bender-Cormier with Bender Insurance Solutions. We want to welcome you to another educational Bender U webinar, ExMod Explained, the number that determines what you pay. Some housekeeping notes. If you have any questions during the webinar, please feel free to type them into the Q&A section. We'd like this to be an interactive experience, so our presenters will be available to answer your questions in real time throughout the webinar. During our additional Q&A time at the end of the presentation, I'll be sharing other questions you might have with our speakers. We want to be conscious of time, so if we don't get to answer all of your questions, we will gladly reach out to you individually after the webinar. You are all in listen-only mode and will remain muted throughout today's session. This session is being recorded. At the conclusion of the webinar, the recording link, as well as a copy of the slide deck, will be forwarded to you. We have an incredible set of experts sharing with us this morning, and I have the honor of introducing them. Matt Heimerl is the founder and CEO of WorkCompare, a platform that provides insurance professionals with data-driven insight into the California workers' compensation marketplace. Established in 2007, WorkCompare continuously tracks pricing for more than 140 carriers and monitors policy and experience modification data for over 700,000 employers. Through his work, Matt helps agencies better understand the market so they can guide their clients to the best workers' compensation options. Our other speaker, Chad Watts, is Vice President of Construction Risk at Bender Insurance Solutions. With 20 years in serving the construction industry, Chad helps contractors reduce risk and control insurance costs through proactive risk management and leadership development initiatives. He has been the endorsed broker for the insurance broker for the Roofing Contractors Association of California for over 10 years, bringing deep industry insight and trusted advisory experience to the contractors he supports. Welcome to you both.
Thank you. Hello, everybody. Thanks for jumping in and joining us this morning. I keep making the joke. It's probably a terrible joke, but why on earth would you join us for this? ExMod Explained. We're going to get into it, but I appreciate you being here, and I appreciate a chance to kind of share a little bit. I think you'll see why I'm very boring at parties as we get into it, because this stuff absolutely fascinates me, and I have a ton of fun doing it. So I want to get you thinking about this in kind of this way. Why is your ExMod something that you should pay attention to? Why is it something you should take seriously? Some of you may understand it, you may know what it is, you may be coming in with very specific questions, and we'd love to talk with you guys about those. So please feel free to type them into the chat and we'll get to them. Some of you may be coming to kind of understand exactly what the heck this thing is and why it's so important. So we're going to kind of run through that and give you a general sense of why your ExMod is impactful and why you should understand more about it. There's really two important reasons. I'll just get to that answer right now. The first is that your ExMod affects how much you're going to pay for your workers' comp policy. It has a direct relationship to the total cost of your policy. A good ExMod can actually bring the cost of your policy down. A bad ExMod will raise it up, make you pay more. So if you have some pain on your workers' comp policy, I'm going to give you some thoughts at the end of kind of my section here on what you can do about that. But your ExMod is going to affect what you pay. The other thing that's really important about this that I want you to understand is that you are in control of it. This is the one part of your work comp insurance policy that you can actually control. So you can't control rates. You can't control whether or not a carrier or an underwriter really wants to quote your policy or issue you something. You can't necessarily control whether or not they're going to quote more aggressively. Hopefully Chad can do a little bit of that, but the one thing that you can go home and do yourself is work on improving your ExMod that will over time lower the cost of your policy. So I want to get into that, but let's first start make sure we're on the same page. What the heck is an ExMod? So when I talk to business owners like you guys, I like to use an analogy. Again, you may know this, but let's just make sure we're on the same page. An ExMod is like your driving record, okay? So for your auto insurance, you have a driving record, and a good driving record will make sure that you don't overpay. A bad driving record is going to increase the cost of your auto insurance. So the things that go into a driving record are like how many claims you have, how many at-fault accidents, moving violations, tickets. I mean, these are big, bad, scary things, but those are the things contemplated by your driving record. Your driving record is actually an underwriting tool. It is something that the insurance companies look at to help predict if you're going to have accidents in the future, right? So if you tend to have accidents, you're probably going to continue to have accidents. That's why your driving record impacts the price of your insurance. Now, we're not here to talk about that, but ExMod for your business is the same thing as your driving record for your auto insurance policy. Does that make sense? So an ExMod is an underwriting tool, and it tells your underwriter how safe your business is, okay? So if you have lots of claims, lots of injuries, people are falling off ladders or hurting their hands and equipment, that's going to drive up your ExMod and drive up the cost of your policy because it's a reflection of how safe you are, okay? So I want you guys thinking about what are some ways that you can improve the safety of your business, and those are the types of things that are going to affect your culture and your ability to bring down your ExMod. So I want to show you a couple of things here. Sorry, that's the wrong one. We're going to get to that. I have a few sample ExMod worksheets here. Some of you may be familiar with this. You may have seen this before. You may be experts, but others may have never seen this before in your life. An ExMod worksheet is an essential part of your insurance application that your broker is going to send to the carriers when you're renewing your policy. And your underwriter needs all of this data. So I want to kind of zoom in here because this is nasty. I mean, there's a lot going on here, and I'm not even sure I understand all the details or how it works, but we're actually not going to get into this calculation in detail because you guys don't have to do it. But I want to highlight a couple of things. So basically what's going on here is the ExMod worksheet is looking at claims over time, loss, the actual loss amounts. It's taking that into kind of this math puzzle, and it's determining the ExMod. So in this scenario that we're looking at here, there are 6 claims. In the past few years, you can see if you look closely here, some of these claims are pretty big, in the hundreds of thousands per claim. So the ExMod for this business is 158, and it's a percentage because I'll show you in a second here that this is going to be multiplied to the cost of the policy, and it's going to impact it. So 158 is not great. This employer is going to pay about 50% more for their premium because of their claims and their ExMod. I've got a couple other here to show you that they're not all terrible. In this case, there are 5 claims on this sample, but you can see the claims are much smaller. The biggest one is 20,000. That's a lot, but it's not too bad. The ExMod for this employer is 87. So this is going to reduce the cost of their premium when that dollar amount gets multiplied by this number. And the last example here is kind of right in the middle. So you can see it's still pretty nasty, but when we zoom in, this employer has only had 1 claim, and it's pretty big, 175,000, that is going to impact the ExMod, but you can see it's pretty close to 100. It's only 103, so that's not too bad. Now, I want to show you the math here on the policy. I'll jump to that in a second, but before I do that, I want to highlight something here. You can see on each one of these ExMod worksheets, there is this information down here, loss-free rating, 80%. So what that means, if you ever see your ExMod worksheet, you can see that they are calculating, it's not a second ExMod, but imagine a scenario where there were no claims on this policy. So for example, if this claim never happened, the ExMod wouldn't be 103, it would be 80, okay? So they're actually encouraging you to think about that and understand how do you reduce claims, control costs over time, okay? So let's jump over to our website. So this is the WorkCompare website. We have built this for insurance professionals like Chad. This isn't a website for business owners like you guys, but I want to kind of show you behind the curtain here so you can understand what's going on. Again, I'm not going to kind of walk through what is WorkCompare is all about. It's kind of irrelevant. The point is that we can do the math and show you the impact of the ExMod. So I'm imagining in this scenario that we are working on a renewal policy, and one of the carriers that's involved is a state fund. That's probably an insurance company that you guys have heard of, and it would be likely in a situation for a roofing account here that state fund would be involved. Again, that doesn't really matter because we're not trying to pick markets. We're simply trying to look at the impact of the ExMod. So I've taken this kind of scenario account and I've recreated it as a report here in WorkCompare, and I want to show you something. Okay, so we've input the ExMod amount, and basically what that means is the total cost of this policy is about $130,000 in premium. So this is what the business owner, the employer, would be paying for their renewal if they went with state fund. Okay, so this ExMod is directly in line with the math. Now let's change it. Remember the loss-free rating, the loss-free ExMod was 80. If we update this, watch what happens to this total cost here. So the premium drops to 100,000. Okay, that's a $30,000 difference. So basically what that means is this claim, right? This claim that happened cost $30,000 on the policy. That's real money. That is, you can't get out of it. You've got to pay it. That claim has impacted the cost of this policy by $30,000. The ExMod is going to follow for a few years, so that claim is going to cost more than $30,000. It's actually going to increase the cost for a few years on the policy. But again, I'm just trying to illustrate that this has a direct effect on what you're going to pay. Let's look at it in another direction. Let's say that there were a couple of big claims. It wasn't just one, but there were a few. And let's imagine that the ExMod was actually 125, not 103. So you can see that jumps the policy up to over 150,000. Okay, this is again real money. That's why your ExMod is important and how it impacts your policy. Okay, so I mentioned this before, but some of the good news is you don't have to really understand this. Okay, you may want to, and that's fine, but the reality is you just got to understand that when you have claims and losses, it's going to impact your ExMod, and your ExMod is going to impact the price of your policy. But you don't need to be an expert in ExMod. You don't need to be an expert in the math of what's going on in there. What you do need to do is make sure that you're working with a broker that can guide you through this. Okay, that is going to really, really help. So the biggest takeaway that I want you to have, right, is to understand that your ExMod is going to impact the price that you pay, and you're in control of it. So that second piece is the takeaway here. You need to be working with an insurance team that can help you understand this and get this in control. So I'm going to suggest a few next steps, and then I'm going to put Chad on the spot here. But what I think you can do to begin right now to get control over this is reach out to your team at Bender and ask them some simple questions, right? What is my ExMod? Can you show it to me? Can you walk me through it? Help me understand what's going on here. Why is it high? That sort of thing. That's a great set of questions to talk to your broker about. Ask them, what can I do to close claims? You know, if we go back to this other scenario where we've got many claims and they're all pretty high, what can I do to start closing these claims, bring these down? What can I do to improve my loss control? And most importantly, what are some things that I can do to build a safety culture inside my business? How do we mitigate this? How do we take care of our employees better? How do we get them to take care of each other? What are some things that we can do there? So again, these are questions that I think you can go back to your vendor team with and start this dialogue and get working on improving that. So Chad, I'm going to turn to you here and ask you, am I talking crazy? Am I making this up? Or is this real? Have you worked with clients? Do you have real life scenarios or stories where you've been able to work with a business, they've been able to improve their culture, and has it resulted in savings? Is the investment worth it?
Yes, very much so. I am the type of person that you would call a nerd. I actually love that worksheet because you can really dig into what moves the needle. And there might be some people on this call who want to know more about that worksheet. You ask your questions. This is the right platform for that. So if you have any questions about that worksheet, we can walk through any of those questions. But to answer your question, Matt, about have any of my clients or people I've worked with seen a change in their ExMod? Yeah. One thing that I always have to remind policyholders and people with ExMods is that the ExMod is a lagging indicator of a few things. When I think about an ExMod and what can impact it, I think of a safety culture. I think of a company's claims management process. When I say company, I mean the employer with the ExMod. And I also think of their hiring processes. Those three aspects of an employer's business can really move the needle with the experience modification. And so, yeah, when I've worked with contractors and employers on, you know, how do I fix this? How do I change this? Or some are even asking, mine's good, I don't know how it is so good. How do we protect it? Right. And we still look at those three things: the safety culture.
I'm curious. Tell me about hiring practice. Why is that going to impact an ExMod? That seems like a disconnect. But do you have a story on that?
I actually have a great story about that. So it was probably 8 years ago. I was working with a new company in Sacramento, and we'd had their insurance for about a year, and we made some really cool improvements in their pricing just right off the bat. But we went in for the next renewal, and they asked the question, what's next for us? Like, what should we be doing? And I was like, oh my gosh, great question. Let's start a safety committee. And the reason I wanted to start that safety committee is because I saw some writing on the wall that they might just be lucky, right? I didn't get the impression they were a safe workplace. They've just been lucky and they've been performing well, luckily. And so we started the safety committee because I wanted to see what was really going on. And we looked at all their claims. We looked at all the activity. We started drilling down. And I was hearing complaints about claims that had some red flags, fraud. They were saying that these employees were making up accidents that didn't happen, or they were embellishing the accidents, that it wasn't as bad as they were saying, and it was causing the claim to be delayed and become more and more expensive. And there was some reality. It wasn't all made up. There was some reality to their complaints. But it got to a point where I raised my hand in one of those safety committee meetings and said, who's hiring all these people that you claim are criminals and crooks and, and committing insurance fraud? And that was a real look in the mirror for them. That, yeah, they had some problems with claims and how they were being handled, but they hired all these people who were taking advantage of the work comp system, who were lying about their injuries and accidents.
Yeah.
They didn't have a good safety training program, an ongoing, a good onboarding program. You know what I'm saying?
Yeah.
And so when we start seeing red flag claims like that, we got to take a look in the mirror and saying, how are these employees, how are these claims coming into our organization?
Yeah.
Right?
So is this setting up a safety committee? I imagine there's other ways to do it inside an organization. Is it costly? Is it complicated? Like what's the input and what's the expected output to try and move the needle on improving things?
Yeah, an effective safety committee takes commitment. It does take a little bit of money because you're going to have people in a room talking about culture, accountability, safety, things that we can do to improve. And you're paying those people to sit in that meeting and talk about ideas. And then we're hoping that those ideas make it into the field and get implemented. And so again, more accountability, right? More, how do we make sure this actually happens out in the field?
Yeah.
And then again, it being a lagging indicator on the experience mod, you're making these adjustments and changes to your organization for 2 years before anything could even show up on your ExMod as a positive impact.
Pause on that for a second, because you mentioned this before, a kind of a lagging indicator. So are you saying that if I have a claim today, does it change my ExMod today? How does that work?
Yes. So how it works is if I have a claim today, that claim is not going to hit my experience mod until my second renewal from today.
Okay.
Okay. So what my next renewal doesn't look at this past year. It's the renewal after that where that claims data is on that worksheet.
So you're talking about
it is a lagging. Yeah. If you find that one, So you'll see that there's 3 sections going down the page,
right.
And those are 3 policy periods. And
right.
the most
so the bottom is 21 to 22, and then 22 to 23, 23 to 24. Yeah. Okay.
Yeah, and that's the 25 experience mod.
Yeah. Yeah.
So yeah, so that's why I say a lagging indicator, because you can have a great loss-free year, but it's not going to hit your experience mod for another year later.
Okay. So
right? So this takes
losses,
some real commitment.
Yeah. So losses 3 years ago are still holding on to and affecting the ExMod in a negative way.
Correct. Yeah, it takes 2 renewals for them to get on the worksheet, and then they'll be on the worksheet for 3 years.
Yeah. Okay. So
and then same for a good year.
All right. So bad news. No quick fixes. No magic wands that just make your ExMod go away. What about
in terms of the ExMod? You're right. It's not immediate. Now,
what about
take, go ahead.
Yeah, I was going to say, what about like closing claims and, can an ExMod be revised? Can you do some work and have it, is there a little bit of a magic wand?
There is, I wouldn't call it a magic wand, but there is some work that can be done. If you remember, I said safety culture, claims management process, and hiring practice. So that claims management process, if we get a good built out process and we manage a claim well, and it closes for, I think it's 60% less of what it was originally estimated at, then the WCIRB, the organization that creates these XMods, they
Yeah.
will recalculate that
Okay.
experience mod, and it will be retroactive. So
So
I have
does that,
seen,
yeah, does that mean that, like, if you paid 130,000 for last year's policy and the XMod gets revised retroactively, does your carrier send you a check?
that's right. They will
Okay.
revise that premium, and they will return the funds that they did not earn because that
Okay.
XMod was revised.
So
Sometimes you have to ask for that revision,
mhm.
and sometimes the carrier will just automatically send that revised data to the bureau.
So two big things that a business owner could do: start building a safety culture and ask for help reviewing all of these claims in the past to see if any work can be done, right?
Yeah, yeah. I mean, how a claim's being managed today, you might have an employee who could come back to light duty, but you don't know because you've
Yeah.
never seen their work restrictions, right?
Yeah. Is that a normal practice for vendor or for agencies to go back in time and look at claims? Is that like, what is that? What's involved in a service like that?
Yeah, it is something that we do. Not all
Hmm.
brokers do it, but it is something that can be done. You can audit claims to make sure that they got closed fairly. You also want to audit these worksheets. Sometimes there's a clerical error on here, and we can identify that error, have them fix it, and they will retroactively revise. But you want to watch these claims to make sure that they're not over reserved. We don't have a big estimated claim amount. Once it does get to closure, that it gets revised to where it actually paid out. So yeah, those revisions are important because it impacts you,
Yeah.
and it will impact you for 3 years.
What's the biggest XMod you've ever seen?
Oh, the biggest one I've seen was probably around 225.
Okay.
But I have heard stories in our agency where they're pushing 400 or maybe even 600.
So for example, on this account, if we make the XMod 225, oh wow, so it's like tripling the policy essentially.
No joke, it is.
Yeah.
And now for real, put in that 425,
Yeah.
because there are some employers who are still
Wow, geez.
operating their businesses with an XMod like this and paying these very high premiums. And again,
Yeah.
this is state fund. So
Mhm.
I think this is a pretty good representation of somebody with an XMod like that. They
Yeah.
would be paying these rates,
Yeah.
because
So
you know what, your net rate went way up.
yeah,
So
yeah,
that's that was a
yeah,
good adjustment there.
yeah, yeah. So let's go back to your story, and I'll ask the question again. Is it worth the investment? You know, it is building a safety culture, engaging a broker who can competently help audit and revise claims. Is the brain damage, is the actual cost worth it?
It is worth it there, and it's not just the experience mod that makes it worth it. I mean, the experience. So that example I shared where we dug into their hiring processes, we also dug into their claims management process. We dug into their safety culture. They saw their experience mod go from 124
Mm-hmm.
down to where it is today at a 63, and
Wow.
we're still working on it. Their premium originally was around 350,000. It got all the way down to about 128,000. So they've seen some real reduction in costs. But
Yeah.
I think that the real win is that they have legitimately changed the culture of their organization.
Yeah. Yeah.
They have much better accountability. They have people who want to work there because they feel the difference in the organization
Sure.
when people are living what they're preaching around safety, right? Around
So
accountability. So it
yeah.
has
So
just across the board, across the organization, a huge effect on the organization.
that's totally fascinating. What's the actual cost? What's the actual investment? I mean, is it time? Are they building systems? Is there operational spend? I mean, what what goes into that sort of organizational change?
It is going to depend on the organization. There is not a hard cost to, how much does it cost to start a committee?
Yeah.
How much does it cost to reduce the ExMod? It's going to come down to what are the real problems? Because when I look at a high ExMod or I see claims, I see symptoms. I mean, those aren't the problem. Those are symptoms of the problem. So it depends on what the problem is. It could be a real easy fix. Get rid of one person who's the problem, right? It might be one foreman who could fix the entire problem, and that doesn't cost you much at all.
Yeah.
So it really does depend, and that's what I love about these committees is we get to really dig in and see what are the real problems that we need to address.
Yeah.
And then as an upper management, you start making decisions around, okay, where are we going to spend money to see improvement? So I wish I could give you an answer on how.
Yeah, no. I think let me ask a crass question. What do you charge for this? Is this? Is this? If organizationally it's more of a time and a mindset adjustment, and am I writing a check to Bender for these services?
You already pay your premium, and those insurance companies pay us a commission. So this is built into what we provide as an organization.
Okay.
I do this for my clients at no additional cost.
Yeah. Okay.
The goal is to help my clients improve, and that is the best way I can do that.
Does it matter what kind of business it is? Construction, manufacturing, hospitality? Does it matter how big or small they are? Are there limits?
So the size of the company will determine if they have an ExMod, right? The size of the payroll.
Yeah.
So that'll determine if you have an ExMod. It will determine what the ExMod does, because if you remember on those worksheets that showed a loss-free ExMod, it's different for every employer. That loss-free ExMod is different because it depends on your size and depends on your payroll.
Yeah, I noticed the spread on this one is even bigger than the example we looked at.
Yeah, so even that part can change for an employer, but any employer who has employees can start some sort of a committee and start digging into again, the safety culture, the claims management process, the hiring process. And you might find that you only lack in one area. I'm not saying that everybody has a problem with all three, but of all the committees I've sat on and all the companies I've helped with this stuff, those are three common threads that usually come up in those meetings.
So if I'm a plumber with one crew and I'm worried about my ExMod, I can call you. If I'm a manufacturer, the biggest manufacturer in Sacramento, you're ready to help me.
That's right. I've worked with an organization that I think they have billions on their financial statements in the Bay Area, and organizations that have 5 million in revenue on their balance sheets. This is the opportunity is real for any employer. It's just how many zeros are on the end of your balance sheet. There's really no difference. You deal with the same problems, accountability. And I would actually say the more levels of management, there might be more problems. So a small organization, they could see some pretty quick changes because there's not so many levels that need to make changes. But yeah, I think that this is important for any size employer, and we would help any size employer with that.
Yeah, that's great. I feel like we can wind down. Are there any questions from the group that we should focus on? Or Chad, do you have any other thoughts or any questions for me?
I would just reemphasize that if anybody wants to dig into that worksheet, we can do that. Because in my opinion, as we go through this process, you will learn that worksheet. You'll become very familiar with it. It's not as complicated as it looks. You just need someone to show you what everything is and how it works together. But you will become familiar with it. and you will want to become familiar with it as you're learning these things. But yeah, I would just say that if anybody has those questions, don't be afraid to ask. I mean, that's what this platform is for. We can answer any questions you have about, why is there a threshold on these claims, or what is the threshold on these claims when it hits your experience mod.
Yeah.
Perfect.
So, yeah, it sounds like starting is pretty easy.
Yeah, so friends, if you can send in your questions through the Q&A section, I'm happy to read those to our presenters. And we do have a couple that are coming in. When do ExMods come out? How does an employer request that info?
So your experience mod gets published about 3 or 4 months before your renewal. I could really get into the weeds. It's 6 months after the policy expires that the insurance company sends the information to the bureau. And then it takes the bureau a couple of months to calculate your ExMod. So you could know as early as 5 or 6 months before your next renewal, but maybe as late as 3 months before your next renewal, you could know what your experience mod will be.
Perfect. Another question, how does OSHA get involved for high ExMods?
Let me take that, Matt.
Yeah, go for it.
All right. So Cal OSHA has a high hazard employer list. It is a list of employers with an ExMod of 1.25 or higher. And that just puts you on their list. They could come walking in any day and start asking for your written programs, start asking for an inspection, because you're on a list. You've been identified as high hazard. And that's what Cal OSHA really wants to drill down on, is how can we help? I don't know if their idea is to help you improve, but they're gonna get some enforcement involved to compel you to improve. So what you could do is you could implement some of these things that we've mentioned. You could even call Cal OSHA consultation. So if your ExMod gets above 125 and you want Cal OSHA consultation to come out and help you, you could do that. And consultation will tell the enforcement side, hey, we're working with this employer hands off. So they won't just come walking in your place because you're on their list. They might send you a letter saying, hey, you're on our list. It doesn't mean you're in trouble. It just means now you're notified you're on their list.
So pause on that for a second. Is Cal OSHA going to come in and help manage claims and close claims? Are they going to help build a safety culture? Do they charge for their consultation?
Good question.
It sounds disruptive.
So the consultation side is going to come in and they're going to look like enforcement. They're going to do the same inspections, ask for all the same, the IIPP, the heat illness, all that stuff. And they're going to analyze it and let you know where you need to make changes. They'll give you that list of, you need to update all these things, you need to do all these things, do these trainings, and then they'll give you a timeline and when you need to get it done.
Do they fine you?
It's free. No, there's no fine.
Okay.
It's a free service. And like I said, it gets you off of the enforcement radar. Now, if you ignore their feedback, then yes, Cal OSHA enforcement could come in and start issuing fines. But if you bring consultation in, you obviously have a goal to improve. Okay. So that list they give you, you'll comply with, I'm sure. But no, they do not help with claims. They're just looking at the safety programs and how effective they are in the field or in your shop, or whatever your organization does. They're going to make sure your safety program is effective.
So they care about your employee well-being, but they don't necessarily care about your insurance cost.
That's right. That's okay. Right. They're not a way to, they're not focused on the insurance side at all.
Yeah. Okay.
Perfect. I have another question. At what point does salary continuation being paid on a claim stop impacting the claim ExMod cost?
So the experience mod, the claim on the experience mod, Matt, will you go to one of those worksheets and go to the one that has a lot of high claims? You'll see on the worksheet that there is a number. So the way we're looking at it, the far right column, there's the column right next to it in the left. That's the cost of the claim on the loss run. But you'll see, so there's a 350 that will show up here, but then on the far right, that's the number that they use to calculate the mod. Okay, so there is a cap on each claim and how it will impact your experience mod. And you'll see that cap is just under 18,000, 17,750. Okay, so in terms of salary continuation, once a claim gets over that 17,750 for this employer, and this 17,750 changes for each employer. So for this employer, when a claim gets above that 17,750, you could make the decision to stop paying their wages because it's not going to impact your ExMod anymore. It's already done the max damage you could do. Okay, so you could, as an employer, decide if it's not going to help our ExMod and help us reduce it, we're just going to stop paying them and let the claim grow. There are situations where that might make sense, that strategy, but I think those are far few and in between, because salary continuation, light duty, is a very good way to keep the culture, the safety culture, alive. We don't want to just make dollars and cents decisions if we can prevent it and say, oh, it's already too big, cut them loose, because that can affect your culture as an organization. But I think I answered the question, that once it gets over the 17,750, you could stop paying salary continuation and it would do no more harm to the ExMod.
We do have a follow-up question to that. Is it only possible to determine the employer's cap by looking at the rate sheet?
Say the beginning part of that question again.
Is it only possible to determine the employer's cap by looking at the rate sheet?
I mean, if you wanted to get nerdy and you could calculate it, but it is on this worksheet. It's not on your insurance policy. So yeah, you would want this worksheet to see that primary threshold. Can you highlight that? Do you see that? It's right.
Which one?
It's right above the 17,750 on the far right.
Yes.
There's a number that says 18. So that primary threshold, that tells you, the employer, what that threshold is. So anything over that is capped. And then the reason it's at 17,750 is because the Bureau forgives the first $250 of every claim. So you see that $250 discount from the 18,000 there. The reason they implemented that discount is because they want you to turn in small first aid claims, but those aren't gonna hurt your ExMod.
And they were wondering, does the cap change each rating?
It could. So they're going to look at your expected losses over on the left side. So the bottom left, the expected losses there. There's a table that they have in all their formulas, and based on what your expected losses are, will determine what your primary threshold is. So if your payroll fluctuates over the years and that expected loss number fluctuates a lot, then you could see bumping up into the next or bumping down into another one. And that's partly why your loss-free rating could change, because your expected losses change.
Wonderful, thank you. Another question, if a business closes claims, does the ExMod change right away? What does that do to the math?
So if you close a claim today, it depends on whether it will impact the mod today. In general, no. It will take 2 renewals. I take that back. Because of the timing of when the data goes to the Bureau, it could take 2 renewals. It could be the next renewal. So it's going to be either the next renewal or the second one after that when it changes. If it falls into one of their 3 categories of a revision, then we could see it retroactively change.
So this 158 is not permanent. And
it's not permanent.
Right. Okay. So if we close, it looks like there's 1 open claim on this one. If we close it, we're going to start, and we improve culture. We don't have big claims going forward. This is going to start to drop over time, year in and year out.
Yeah. I mean, you see a large number of claims on that bottom section.
Mm-hmm.
That's the oldest year. So that 35,500, that will fall off, and the next year will come on. So I mean, if we have a good year coming on and that bad year falling off, we could see a nice reduction this next renewal.
Yeah.
But in terms of closing claims, it's going to determine on when it was closed and when that data got sent in. So when we are working with our employers, we're actually working to close claims before that 6-month mark when the data goes in, because we want to see new data, better data go into the Bureau.
That's 6 months after the policy starts, right?
Yeah. Okay. Yeah. Starts or expires. Yeah.
Yeah. Not a calendar 6 months, not like before June, but it depends on the actual policy. Yeah. Okay.
That's right.
Perfect. I have a couple more questions. I like the wording on this one. Building a safety culture sounds squishy. How does that change an ExMod and what a business will pay?
Sounds squishy. Okay, so I have to interpret what squishy means. Maybe that means like kumbaya, like real soft. If that's what was intended with that word, it can be. A safety committee can be very kumbaya because we're trying to reach a consensus of how is this organization going to go forward. And as you implement and start embracing accountability, there's going to be a lot of soft, squishy vibes and feelings. Do you interpret that word any different, Matt, when you hear that question, squishy? What do you think?
Yeah, no, I thought that. I also thought, like, is there a formula, right? It is when you help a business do stuff like that, is it the same for everyone, or is it more involved? Is it
yeah, squishy, maybe moldable. So yes, I would say it is squishy in that aspect where it's not one size fits all. It is really going to determine or what's going to determine how your safety committee operates is really what you're working with, the type of people you have working for you, the way you like to operate. There are some employers who want nothing to do with this because they feel like it slows them down, right? We don't want to slow down and have these meetings and have these discussions. We just want to make money. And you have that right as an employer. So yeah, a committee is not one size fits all. It can be very squishy and moldable to what you need.
Perfect. Okay, we have one last question. What if my business is brand new? How do I get an ExMod?
Very good question. So that table that I talked about, the Bureau has that determines the primary threshold. They have another table that determines when you get an ExMod. So once your primary threshold reaches a certain level, and I don't remember what it is, it might be around $6,500. But once your expected losses are the right size to have a primary threshold, then they will push out an ExMod. And they don't warn you it's coming. I mean, there it is. All of a sudden you have it. Again, it's 3 or 4 months before your renewal. But yeah, you won't know it's coming unless somebody tells you. So I know that I can't speak for all brokers, but I know that we will pay attention to that. When we have a new employer, we'll say, hey, you're getting to that size where you're going to get an ExMod.
So if a business doesn't qualify for an ExMod, what happens to the math, like on the policy?
They just use a 1.00.
Okay, so
Yeah, they
it's
consider
just,
you average.
yeah, okay, so it doesn't, it technically doesn't have an effect on the policy.
Correct. Yeah, if they don't have an ExMod, they'll just have the 1.00. And the reason they do that is they see that for smaller employers, this could have a terrible impact with one small claim.
Yeah.
And
okay.
so that's why they have that threshold dropping. This, if you're a smaller employer, that threshold starts dropping to where claims have a smaller impact on you. It was probably 5 or 6 years ago that they made that change. This calculation's been changing over decades, and I mean, it's a science. They're trying to make it fair, though sometimes it doesn't feel very fair.
So you mentioned that you will track your policyholders' business and ExMod and give them a heads up. So what went through my head there is, if I start a business and need insurance and come to you, I may not have an ExMod based on the calculations on that table. And you're telling me don't be surprised when all of a sudden I get hit with one. That might happen, 3 years into the process? And are you going to calculate that and warn me that I have a 150 ExMod coming and I need to budget more? Or, I mean, is that literally what you're saying?
Yes. So we will do a forecast for our customers, and we're looking at that data. When the insurance company sends it in, we request it so that we have it, and then we can calculate what that ExMod will be. So if you're a new employer and you're not sure when and what it's going to look like, we will help with that. Yeah, we will help calculate that, help you prepare for it, because we don't want any nasty surprises. We want you prepared for it.
Perfect. We do have one other question that's come in, and we'll answer this one and then we can go ahead and wrap up. But does an ExMod keep dropping if you don't have claims year over year? It has been many since we've had a claim.
So if you are claims free and you have been claims free for 5, 6, 7, 8, 9 years, it will not just keep dropping if you have no claims. What could cause it to drop or go up if you're claims free is your payroll numbers. As your payrolls change, then your expected losses will change, and that will impact your loss-free ExMod. So the answer is no, it won't keep going down if you continue to have no claims. That will be determined by your payroll numbers year over year.
So let me make sure I understand that. If I've loss-free, super culture, all of that stuff, and I give everybody raises, my ExMod will go down?
Yes, that would happen.
Perfect. And okay, I know I said one last question. But this one is seems like a very easy response. So what is considered a good ExMod rating?
Yeah, anything under 1.00 would be considered good. 1.00 is average. That means that you meet the metrics of what we expect an employer with your payrolls to have in regards to claims. So if you're a 1.00, you're average. You meet the metric. If you're under that, then you're good.
So I just, because we can look at the math, if we put in 1 for the ExMod, you can see this number doesn't change. But if we drop it by 75%, it's going to reduce this amount by 25%, right? So anything below 1 is technically good. Anything above 1 is moving in the wrong direction.
Yeah.
Perfect. Thank you so much. That seems to be all the questions that we have. And Matt, can I have you just scooch to that? Perfect.
Yeah.
So folks, we do have a Vendor U coming up in April, and this one's kind of special. We are going to be doing this one in person. So We are going to be hosting it at our office in Roseville. So we'd love to see you. So go ahead and scan this QR code. We'll also be sharing the link to register when we do our follow-up email, but we'd love to see you there. We're also going to be making this is going to be in the afternoon, and we'll be doing a social mixer at the end with beverages and snacks. So please join us. We'd love to see you there. Well, thank you again to both Matt and Chad for sharing with us today. We appreciate all of you for taking time out of your busy schedules to join us for today's Vendor U. As a reminder, while this session has been recorded, and both the recording link and a copy of today's slide deck will be emailed to you following the webinar. And should you have any questions that arise later, we know that can happen. Please feel free to reach out to us, and we will be happy to help. Thank you again, and we hope you have a wonderful day. Thank you, Matt. Thank you, Chad.
Thanks, Julian.
Appreciate it.
Thanks, Matt.